Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. For so many months I have looked at this daily chart and seen the same basic drivers here are still moving this market higher despite the occasional hiccup. The rock of certainty is still anchored on a few patterns, but there may be a new kid in town now. The original patterns were the middle time, currently at 17,320, and the upper time, currently 28,115, of the big 2017-2018 shallow bullish shift pitchfork. The upper time had been especially significant in September when the top of the market was capped by this very same upper time to the point. I also recognise the recent roll of the lower time, currently 20,210, of the October 2020 to March 2021 bullish shift pitchfork, in showing the more recent bullish angle of attack, especially as support last week and the week before, working in conjunction with the slowly rising long moving average, currently 18,065. I'd like to quote once again something I originally said now some 11 weeks ago, and I quote, "Whilst these two pitchforks are in operation, the market will still have the bullish incentive, even if sometimes it looks like it is missing." End of quote. Now, this has gone a long way to mitigating the action specifically seen over the last 2 weeks, notably the touch and go lower the market made with the upper time of the big old 2017-2018 bearish shift pitchfork. So the question I posed last week is, what now? Well, prices last week have halted their decline at the previously mentioned supports and then started to move back up again at the end of last week and going on into this week, seemingly halting at the moment at the flatlining short medium moving average, currently 19,160. Last week prices clear punched up through and closed significantly over some significant resistances which had been supports and then resistances, and that's the recent 50% Fibonacci line at 18,185, slowly rising medium moving average, currently 18,750, and the significant August 2019 high at 18,850. This has also been a brisk, if contrary and reactionary response to September's monthly key reversal down. We seemingly have peaked for the moment yesterday in what looks like a wide congestion layer from August between roughly 18,600 to 19,800. Incorporating part of the August 2014 congestion between 18,400 and 19,070. However, as I mentioned earlier, there may be a new kid in town, actually a bullish kid. It is the April to September bullish shift pitchfork, specifically the middle time, currently at 19,445, which has so far shown resistance to the move higher, especially yesterday on a closing basis. It is still early days, but I think this is one to watch. What is interesting about this pitchfork is how closely it parallels the bullish angle of attack of the earlier October 2020 to March 2021 bullish shift pitchfork. Specifically how the lower times of both of them are so closely aligned. Thus it seems to be a smaller version of that earlier bullish shift pitchfork, even if it is entirely unrelated to it, bar the lows of last week and the week before. It's worth remembering all this, as that earlier bullish shift pitchfork is the primary reason we have this current bullish incentive sitting here at this moment. LME 3-month zinc. As I said here in my commentary some 9 weeks ago and in the weeks since, that on the surface this metal looked like a gently rising market, but there have been and still are some significant forces at play here, and all is not what it looks. In recent weeks the market has risen higher, sticking all the time to the broken May to date rising uptrend, currently at 31.93, at least mainly to the underside of it. I made the following comment some 13 weeks ago and it proved to be true and not just incidental. It also helped to clarify my thoughts thus. It seems to me that the market is currently trying to navigate up this uptrend, but it has at the steering wheel someone seemingly heavily inebriated, overcompensating on each day, as prices generally move in the direction that is wanted. This is not safe, nor can it last, and I would urge caution for when the drunken driver of this market either stops or gets pulled over. End of quote. I also have left the old targets X1 and X2 on the daily chart. These are the initial and full targets for the diamond continuation pattern formed over January to March this year. The market had reached once again target X1 in the 1395 area back in September, and in the process had formed what may have been seen as a triple top, or even the beginnings of a rare three peaks and a domed house pattern. It's a rare one. However, that all finished last week when on the Wednesday we had a key reversal down. Yet this key reversal down is not what it seemed, as the following day, we had an immediate countering bullish open and close white Mariposa, plus also a bullish engulfing pattern. This was the spark that set off the tinder that led to Friday and yesterday's rises, up over the broken May 2020 to date uptrend and to new highs not seen since June 2018. In the process, the market finally achieved target X2 in the 3215 area, which I had been about to retire but kept on just in case. The action during September has showed that the diamond pattern from much earlier this year has indeed been the driver for the moves higher, and despite the attempted bearish looking patterns in September, is the reason we still see bullish actions looking forward. We can only still think that watching the broken May 2020 to date uptrend currently at 31.93 seems to be a reasonable thing to do. It is the current attractor to this market. This market's move higher, and as long as prices do not stray too far away from it, it will continue to show the bullish angle of attack despite the occasional aberration. The next significant resistance overhead is the April 2018 high at 33.02 and then resistance at 33.51. Beyond that, well, we enter some free territory higher, but however, this all may be a little bit premature talking about that. Let's just wait and see what happens at the April 2018 high. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here is the final bit.